Good morning, guys. This is Kenzo Xtrahot Forex. So let's go straight to our daily analysis. Today it's a CPI and FOMC day, or maybe we can just call it Federal Interest Rate Day, because this is like a very, 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 very important day, guys. So this is not going to be exclusively like analysis, where we just talk about the charts only. So we need to talk about these two events or high impact news. So you can see that already on the chart I did share. This is our inflation indicators, and later on rates, if maybe they're gonna increase or cut or pause the rates. But here on the forecast, you can see that they estimate that they're still going to keep the rates unchanged. I checked on different calendars, but it seems like, whoa, they're just going to keep them like this. And my estimate was, I'm expecting them to cut. I'm still expecting them to cut the rates with 25 basis points. Yes, I know I can be wrong with that. So before the rates, 2:30, we have the inflation. So when we check inflation here on the forecast, it seems like we're not gonna see much of a change. Core CPI, it seems like it's gonna stay the same according to the estimates. But inflation year over year and month over month, they seems to be going down. If that happens, that will be good. That will be good. So if you still remember last week, Canada and Europe, they already did cut their rates. So now we're just waiting for the US, and we just need to see what's really happening. And what I've realized is European CPI was also a little bit higher, but they did cut their rates. So it means whether the rates today around 2:30, if they go up or down, I still believe that they're gonna cut those interest rates, and that is going to be good, because the estimate says it's going to be it's going to be the same as last month. So if they cut, that is going to be very, very, very good. We're going to buy until maybe for the rest of this week, maybe even next week. And the thing is, we also saw Nasdaq yesterday trying to perform very well, which was good, by the way. So before we continue on this chart, while we are talking about inflations and interest rates, we are going to open for mentorship. Actually, we have a special. Remember, our mentorship is actually 350. So we're going to smash that, and we are going to take 250. So this is mentorship, which is going to start next month, first of next month. So you can start to reserve your space. So on this mentorship, what do you get? You firstly, this is going to be 6 months, 3 months learning and 3 months practical, where we are going to, or where I'm going to help you to trade, you see. So that you can be consistent in your trading. So on that mentorship, you are going to learn about trading mindset, psychology, risk management, trading plans, your strategies, how we approach the market, everything. So that at the end of the day, you can easily make your own signals. You can actually trade whenever you like, anytime. So we opened that starting from today, but we are going to start from next month. So, and just know that our mentorship is going to be limited for very few people. So just let me know if you want to be part of that team. So, and on this mentorship is going to be one-on-one. So it's not like just because I need people at the moment, it's going to be a group. No, it's just going to be online, one-on-one, on your own terms. And we're going to meet 3 times a week. 3 times a week, which means you're going to choose the time that suits you, and you can create your own schedule. Then we can meet around those times. 1 hour per session, 3 days per week, until that 6 months. Actually, it's going to be 3 months and plus 3 months of the practical. So let me know if you want to be part of that team. So again, the best thing that about this mentorship is it's not only mentorship, you also get the signals. You get this mentorship plus 12 months signals, VIP signals. So it's like it's free signals when you join our mentorship. So it means now you are on both sides, so you're not gonna miss that. So again, at the moment, for those who just want to join our signals, we have that special $60, but this is a limited special. You pay once, then you're done. It's lifetime, by the way. So just let me know. Just let me know if you want to be part of the team. So let's talk about CPI. CPI, guys. Let's talk about CPI. So CPI, actually, guys, we're talking about inflation, or we can say consumer prices. So if consumer prices are going up, like things are getting expensive, you saw eggs were expensive, anything that you buy, the price went up. So the government or the Reserve Bank, what they do is they take their prices, their interest rates, they increase the rates just to try to make sure that those prices go down. And by doing that, it means they have to increase the rates. Then if they increase the rates, it means for those businesses, they will find it expensive to take more cash or to make some loans. So it means they're gonna lower their prices so that their stocks can move. Or maybe we can explain that again. So for example, when we say rates are not really good, when they increase the rates are good so that they can, once the rates go up, guys, I'm not gonna cut this video. I will just rephrase whatever that I'm saying if you maybe I'm making some mistakes. So if the prices are going up, the only remedy that the government, or not the government, that the Reserve Bank have to make those prices to go down is to increase the interest rates. If they increase the interest rates, it forces those prices to go down. But at the same time, it's not really nice. It's not really nice because it seems like if you want to buy a car or if you want to buy a house or maybe take a loan, the rates will be higher. And so much stuff on that. Not only consumers, even businesses. You see. So why is everyone crazy and aggressive towards rates when the rates are higher, and when maybe we expect them to cut the rates? It's because if the rates are lower, that country will attract enough investors. Like now, Canada and Europe, they did cut their rates. So what is the advantage on that? When Europe cut the rates, let's say, for example, this is Europe. I'm just giving you an example, right? So this is US. So let's say their rates here, let's say it's 5.5. I will just say it's 5.5, for example, and maybe US rate is 10. Let's say it's a rate, right? So what's really happening with this? Remember, these rates, they don't really just change very quick. They will take 2 years, 3 years trying to cut these rates quite slower so that they balance the equation. But with this, I just want you to understand something. Let's say this takes 5 years to reach where they want. So if you are an investor, let's say Xtrahot Forex investment maybe wants to invest in one of these countries. Maybe we have a business, right? So what we're going to do here is we're going to check these two countries, US and Europe, right? So every time you do a bigger business, or when you do a business, that country will need to benefit, and not like they're going to take your money. No, what you're going to do there, once you go there, let's say we're going to take $200 million on both sides. I just want you to understand how rates work, right? So $200 million, we start our business. Let's say it's hedge fund, right? So, or whatever the business that we're going to start. So at the end of that 3 years or 5 years, because this is a loan, we're going to take this 200 million as a loan. So this is a loan. It's a loan. Let me write loan here. loan on both of these countries. So this loan, we're going to take it from the banks or any other institution that will give us that loan, right? So on the European side, we're going to pay what? 5.5. On the US side, we're going to pay 10% or of that interest from this amount that we took there to start our business, right? So then we start the business, then maybe after 5 years, this amount grows to 300 million. Both sides, let's say both sides, it's 300 million. So if we have that 300 million, remember we have to pay back this 200, because it's a loan, right? We have to pay this 200 million. We know that mostly when I pay it, maybe slower, not maybe once, but I'm just giving you a quick example. So with this 300 million as a profit, it's profit adding also the loan there. Remember, we have to pay back our 200 million. Let's say when we add also this 5% for that period, let's say at the end of the day, we are going to pay, let's say 250 million. 250 million. So here it's where there is a different. Oh, let me say 250 M. This other side is where we're going to see the difference, because now, just because we have this 10%, it means, for example, now we're going to pay maybe 280 million, for example. So you can see now already this higher interest rates, they actually hitting your ass. Why? Because as an investor, I start to see that no, if I invest this side, I'm not going to make enough profit, because now I have to pay 280. So I'm left with how much? It means we're going to be left with, let me just rub somewhere. We're going to be left with, maybe this side, we're going to be left with 20 meter. This side, we left with 50. So remember, you still have to pay your taxes and stuff like that, right? So let's say this side, once we pay everything, we left with maybe, let's say for example, guys, let's say maybe we left with 40 million. This side, when we pay whatever that we're supposed to pay, we left with 10 million. So this 40 million, it's the profit that we made, and it means we need to split this with our stakeholders. And also the same side, like this 10 million, we have to pay our stakeholders. So at the end of the day, it means, let's say our stakeholder, this side, they might get maybe 100K. They might get maybe 100K for their investment. This other side, you might get 5K. So when we see, you see the difference there. So when the rates are lower, these companies, they can make a lot of money. Do you see that? So on the other side, you can still make money, but your money, as businesses, they work on debt. This term, sometimes I don't really know how to pronounce it very nice. Debt or debt or whatever. So if these companies, they operate on that, mostly like 90% of the companies, they operate like that. Even if they have finance, but they have to operate like that, right? So now you see that the money that we're going to make is not going to be enough. It's not really nice, that nice. And we also have other things that we need to pay. We have bills, we pay the electricity, we pay our cars, our employees and stuff like that. So you can see that that profit is not going to be enough. Now we are going to work on a loss. That's why we see, if maybe the rates are going up, we start to see Nasdaq selling, US30 selling, all those things are selling. Why? How do they relate? It's because of that. You see that, okay, if the rates are higher, these companies, they're not going to perform very well, because they're going to pay enough rate or too much rate. At the end of the day, their profit, it squeezes their profits. You see that? At the end of the day, for them to have enough money, it means they have to cut employees. Just maybe, let's say we have 10,000 employees. If we cut 5, maybe we can save 10 million, so that we can save the company. I think this is a maybe it's a lesson that people they need to learn. You need to learn stuff about this stuff, guys. Even though you're not actually, what I know is when you trade, it's not like you actually need to know deeper than that. But this information can help you to understand. When you just see the rates going up, you will understand way too easier. Before you even go on the chart, you will understand that now US30 or US100 or Nasdaq, this time it will be selling or moving in other way around. And by knowing that, it opens your eyes. When you go to the store, you saw that, oh, last year we used to pay for bread, the bread, whatever that we were paying, maybe it was this much. Maybe, let me just use dollars, it's fine. It was this much. This time, it's like maybe $8. Just examples, guys, just an example. So, deeper, just because you understand what's really happening, when they talk about inflation and stuff like that, you know that, oh, yeah, that inflation is indeed doing its thing there. You understand that. You're not going to complain, oh, the prices are higher. No, you understand that the inflation has been going up for quite some time. And that's why at the end of the day, we say you should learn about the market. There is no shortcuts. We know that you just want to know how to draw the lines. That's fine. But how long will you survive in the market? How long will you call yourself a trader when you just want the shortcuts? Just imagine if maybe you were a doctor who just learned 3 months. Will you go to that doctor? No. So what do you expect yourself to just make things very quick? It's called overnight success. But there is, I think there is an overnight success that I think it's reasonable. You can have that overnight success, but it doesn't just come. It comes after you mostly, let's say for 5 years, you've been grinding. You've been grinding, but when things start to happen, they happen within 12 months or less, or maybe a year. So to me, this is the same as overnight, because you worked your whatever for 5 years or more, and things were not actually working, then we can call this foundation. And at the end of the day, what's happened? When things start to present themselves, when you start to reach your aha moment, when things start to make sense, you start to make it very quick. But it's not the quick that we maybe where people they just want to make it within 6 months. They don't really have the ups and downs. They don't really know what's really happening. They don't even know, and they expect to just make it overnight. That's the problem. But you can still make it very quick. If we check maybe 10 years, 20 years ago, for people to make it, they used to take like more than 10 years, 20 years. I know people who taught us at school. I know teachers, I know principals which took 30 years. And when they retire, they get like maybe 1.2 million or whatever the amount. And they took like 35 years to reach that amount on their retirement. And yourself, you can still make that within 5 years. So to me, that 5 years that we can make it in Forex, to me it's overnight. But there's no shortcuts. I hope that you understand that. If you don't really understand, I don't know if you don't really understand. So yeah, no one doesn't really like overnight or making things very quick. Yes, we can make those things very quick, but you need to have enough knowledge. That's why people read books. You take in the knowledge from someone who experienced that for 30 years, and you read that within 30 pages, maybe within 2 weeks, you're done with the book. Then you have the whole experience. But sometimes you need to go out there and see it for yourself. But it's the whole knowledge. That's why we say on our mentorship, it's $250 at the moment. You also get 12 months signals. Let me teach you whatever that you need to learn. Maybe your overnight success will come very quick. Anyways, now I think, oh, we are on 20 minutes. We are on 20 minutes. So now what's really happening on the market? We saw the market going crazy. So I told my people, you know what? Today we're not gonna just entertain the market that much. Yesterday, by the way, so the market has been playing around. So it was around this level, playing around that level. That's why I'm expecting maybe to see the rates cut. Maybe we'll see them going down. But first thing first, before they cut the rates, we have to see what will happen on the CPI. CPI. Core CPI. Then if maybe numbers are looking good, we might see the sales. Then later on, if they don't really cut, it's fine. Then the market can still reverse. You see. So yeah, the best thing is to let's be safe. Let's not fight the market. And let's just go on gold and Nasdaq and see what's really happening after that. So on gold, we see that the market has been going down also. We can easily see that the market just broke out. I think at the end of the day, we will try to redraw this, you see. At the end of the day, maybe we might have something like that. But at the moment, we can easily see that the market just broke out here. The market got out of that structure. And we had a nice breakout. The market started to consolidate. Now the market started to give us that continuation of a sell. So with this type of a structure, it seems like US, if they don't really cut the rates, this is just going to be the continuation of that structure. Downtrend structure on gold. You see. So that's what I see. So US30, we can easily see that, yeah, the markets actually did give us a nice bullish move. But at the moment, I think the market is just consolidating. Go check my yesterday's videos, guys. If I did a video yesterday, it's not like it's expired. You can still learn one or two things because the market doesn't just rush that much. So whatever that was happening here, I did explain it very nice yesterday. So I can see that the market is still at the same level. So yeah, let's go on Nasdaq and see. On Nasdaq, I saw that it was going up yesterday. Tried to break out. I had my emotions all over the place also, not bad ones. I thought maybe should I jump in? Should I give them this bullish or buy? But the other brain said, no, man, you said you're going to wait. So let's follow the plan. Even if the market gives us this nice move there, it's fine. We're going to have some, so we still have so many days. We still have the rest of the year to trade. So we don't really have to rush. So the market did break out of that structure. Then we'll wait and see because we don't really have to guess. When we buy or when we sell, we have to have that confidence to say, you know what, now we're holding this, then it can go very nice. You remember when we smashing the markets from this area, the market did hit our profits. Yeah, our TP, yes, we need to have that. So, but at the moment, we don't really have that and we don't really have to force. So which means let's stay out of the market. Let's wait for CPI and FOMC. Before that, we're going to jump on the market. So what do we have on the next one? I think is going to be CPI. So but not CPI. S&P. So here we also had a nice downtrend structure on US oil. You can see that US oil, it was going down. Guess what? We have a sell pending order. This thing just reverses. This thing. And you might see it maybe reverse again here. But anyways, it's fine, guys. We did not really have this one correct. But it's still on a downtrend. I still believe that it's still going to go down. But besides that, guys, remember, we still have our... But this special is going to end anytime soon. We have this special for $60. You pay once. It's unlimited signals. So only $60, guys, you can enjoy unlimited. So... Another one is this one. I will talk about it more this month because we are going to start from 1st of July. But you can still pay from now or talk to me from now because if the number of people that I need join before that, yeah, we're gonna say no. The number is full. So you get mentorship. It's mentorship plus 12 months signals. 12 months signals for $250. So let me know if you want to be that part of the team. So thank you very much. You can find my contacts on my description, or you can just click the link, then we can talk. So thank you very much. I will see you on the next one. Bye. And don't forget to subscribe.